Well, hello everyone. We're going to do something a little different today. We're going to be talking about our smart generation portfolio and sort of the philosophy that goes behind it. And unfortunately, when you're a young person, you don't have any idea because you haven't lived long enough to experience any of these things. But this portfolio is designed for the person who has a long-term outlook. I really want to change the name of this, Dennis, by the way, to the Rip Van Winkle portfolio.
Right.
I want everybody's opinion. I want everybody to email me because the little tagline would be, put your money in, don't look at it for a couple of decades, and wake up rich. That's what we want to do. And that's really what's happened, right?
That is what's happened. I tell people all the time that when I first started in the stock market in 1974, the Dow was 550.
Woo!
What is it now, 29,000?
And it was less than 1,000 when I started in '85.
That's true, yeah. A lot of that parabolic growth has occurred since then.
Well, that's a big word.
Yeah. Well, and that's what happens. You know, you invest, and you want to invest for the long term with a long term great idea. But for the first year or two, it seems painfully slow. But then it builds on itself, and by the time you're 5 or 6 years into it, you can really see some growth going on. So this is really a patience game, and like Dawn says, the Rip Van Winkle approach, go to sleep for 20 years.
We used to have a guy that used to, when the market went down, he'd just turn the TV off because that's the only form of information you had back then was the television or the radio, and he would just turn it off. But let's talk about some stocks. Even not so long ago, I bought Amazon. Okay.
You've told me this.
I know this is
already.
going to be a bad story. I bought Amazon at 14. Now I think it was much lower than that, and I kept saying, "Oh my gosh, this company makes no money. It makes no money." But it kept going up and up and up. So I bought it at 14. What the heck? I put it in my IRA, and then I think I sold it at like 120, thinking I made a gazillion dollars on it. Right? I only had a couple hundred shares. Had I done then what I do now, and I recommend everyone do, you sell half, and then you let the other half ride. Might it go to zero? It might. But guess what happened in this case? And that's just one case I'm talking about. I bet you have some like that.
Well, but just to go back to that Amazon, this was somebody who sold books on the internet.
Yeah.
I mean, why would you think it would have evolved into something like this? And of course, there was almost no way of knowing. But it certainly had the potential. There was a huge vacuum there that it moved into. Nobody could see that coming. I don't even think Jeff Bezos could see it coming. But it did, and that's where the sell half comes in.
I can give you another one. Tesla. I bought it at 12. Why didn't I just sell half?
Yep.
So I'm sharing with you my own mistakes and hoping that if you're a young person and you jump into something like this, first of all, you have the patience. Don't watch it every day. Take your money out as soon as it doubles. Take half of it out. Let the rest ride. You will never, ever lose money overall in your portfolio. And I can guarantee that as long as you live long enough. Right? So this is not something I'm recommending for somebody, for you. However, we did just have someone buy Zoom at a very low price, and she did exactly what we suggested. She sold half of it when she doubled her money. So I think she bought it at 120 and sold it at 240, something crazy already. And then it went up to
500, yeah.
So her other half is sitting there. Let me give you another example. There was a small company called Workhorse.
Yes.
And that's sort of a cheap play on Tesla. It's make electric vans for like
electric vans for short haul business.
post offices, Amazon, things like
right.
that. And it went way down. I bought it at $2.50. Now I'm getting a little smarter, by the way. So this time I opened my eyes. I did the Rip Van Winkle thing, went to sleep, opened my eyes, and it was at 10.5. I sold half. That seemed like the right thing to do.
It did.
Well, then I closed my eyes again. I opened them up, and guess what? It was at 21.5. So I sold half of that half. Now, the rest of it, I'm just leaving there. I don't care where it goes. It's going to be there for the long term. And I'm not 20 or 30 or 40 or 50. So we're not going to go any further than that. This is what I want people to understand about a long-term portfolio and the great advantages you have from being young.
Well, being young, it does have a lot of advantages, not just in the stock market.
Right.
But what you need is to be on the right track. How can you tell where the right place to be is? And this is where you start looking at the mega trends that are going on. For instance, for the 15 years before the year 2000, virtually every year, the most typical stock that was kicked out of the Standard & Poor's 500 was an industrial stock. So already in the back of your head, you're saying, okay, the mega trend is not going in favor of industrials. What is it going in favor of? Well, they start looking at text and communication equipment. And that's really what's been carrying this whole market on for the last 20 years.
And I guess I should mention that I also bought a little oil company. That went to zero. So, it happens. And you have to be willing to accept that risk if you're going to be in for the long term. Close your eyes and wake up wealthy. That's all we're going to talk about now. Marcus is going to do a different video piece for us for the website that we'll talk about this. If you only put in $500 or $2,000 a year for a short period of time, what the results will be with only an 8% return. This is Dennis and Dawn with the Naples Money Managers. I hope you'll join us and come on down to the Smart Generation or the Rip Van Winkle Portfolio.